Bloomberg Audio Studios. Podcasts, radio, news.
I'm Stephen Carroll, and this is Here's Why, where we take one news story and explain it in just a few minutes with our experts here at Bloomberg.
Take a look at the price of energy this morning. Brent has slipped through $60. $59 is where we're trading. We are basically back to a 4-year low again.
When US President Donald Trump was inaugurated to his second term in January, oil prices on the international benchmark Brent Crude were around $80 a barrel, the highest since last summer. But in early May, they dipped to around $60, the lowest in 4 years. One side of the story is fears over how big oil consumers like China might be hit by US trade tariffs. But there's also been a change from the countries that produce oil. At its latest meeting, the OPEC Plus group of oil-producing nations decided to increase production for a second month in a row.
OPEC has been trying to balance the supply and demand and find that continuously problem with the overproducers.
You're Saudis, you're like, why am I going to keep subsidizing their output at the expense of mine?
OPEC always seems to act more cohesively when there's a crisis, when they're really up against it.
The question that everybody is asking is why? Why did OPEC Plus decide to increase the amount of barrels that they're putting back to the market by more?
So here's why oil producers are driving prices lower. Bloomberg Opinion columnist Javier Blas joins me now for more. Javier, first of all, a bit of context. How much influence does OPEC Plus have over global oil prices?
OPEC Plus has a lot of influence over global oil prices because it produces, when you count all the barrels, more than 50% of global oil production. So what it does can push prices up and down. And we have seen in the past that the cartel has been quite effective in cutting production, in restricting the supply to push prices much higher. At times, Saudi Arabia semi-official policy has been to keep prices as close as it was possible to $100 a barrel. So they are very influential, perhaps not as influential as in the 1970s, the time of the true oil crisis, but it still remain probably the most important factor in the oil market.
And who holds the power within the group?
Within the group, one country and perhaps another country that really hold the power. Those are Saudi Arabia first and foremost, and then Russia. They are the number 2 and number 3 global producers. The largest oil producer nowadays is the United States, thanks to the shale revolution. But Saudi Arabia and Russia pump each about 10 million barrels a day, again, when you count all the barrels, not just crude, but other liquids. And both are very influential. They produce more than double the next member of the OPEC Plus alliance. And that is a group that it was formed about a decade ago, exactly at the end of 2016. And the group is the traditional members of the OPEC cartel, plus a few other countries, that's the plus on OPEC Plus, that decided to join forces, but they are not formal members of the oil cartel. It's what we call a club, an alliance, or a cartel and a few friends. The friends are Russia, Kazakhstan, and a number of other non-OPEC producers that in 2016 decided that joining forces with Saudi Arabia and the rest of OPEC made economic sense. And they have been, until now, very effective in managing the market, but from time to time, not everyone inside this family gets along well and agrees with the decisions.
As you pointed out in your recent column, cartels exist to drive prices higher. So why then is OPEC Plus increasing supply, which is a move that would drive prices down?
Yes, you are absolutely right. I mean, the only reason for having an oil cartel is to push the price of the commodity that cartel aims to control higher. You do not try to lower prices. That will be like a policy of shooting yourself in the foot, and that's not what rational countries do. However, from time to time, oil cartels face an economic dilemma. One of the members just refuse not to play by the rules. And the rules here are the production quotas. The quotas are the official level that the cartel sets for each of their members, how much oil they need to produce on a given month. For OPEC Plus, the group sets an official level for the whole group and then quotas for each of their members. And what happened is from time to time, one of those countries say, well, I want to produce more. They may have a new oil field coming on a stream. They may need the money. And at the end of the day, this is a prisoner's dilemma. The cartel can only do one thing when someone is cheating, is to apply some diplomatic pressure, perhaps asking politely, nicely, please, will you behave? To start being a bit more forceful on that diplomatic pressure and go publicly, we are not happy. This member of the cartel is not behaving by the rules, is cheating on us. And if that doesn't work, the only other solution is to say, well, then we are all going to do the same. We are all going to produce above the targets. We are going to all produce a lot more. The price of oil is going to go down, and you are going to pay the financial price of your actions. Obviously, that is shooting yourself on the foot. To attack that cheating country, you need to share the pain of much lower oil prices. And the Saudis have faced that situation in the past. They have faced oil producers who have cheated on Saudi Arabia, and the Saudis have launched price wars against those cheating countries in the past to force them to play by the rules. They did in the 80s, actually. In 85 is the first example. They launched effectively a price war against every other member in OPEC. They launched a similar price war in 1998 against Venezuela, and they launched a price war against Russia in 2020. So there is a lot of historical precedent.
Has it worked?
It has worked, but it is a very crude, forgive my pun, it is a very crude way to manage the oil market, because the Saudis ultimately got their way, but only after significant pain on themselves. And at times, it's not 100% clear that the Saudis got what they wanted, and they were in real trouble. In 1998, Saudi Arabia was in massive economic pain. Ultimately, they got what they wanted, but they almost bankrupted themselves in the process.
So how much pain can Saudi Arabia take on this front to bring the members of the group into line?
Here, the problem is that the biggest cheating country is Kazakhstan, which is not a formal member of OPEC, but only part of this Plus alliance. And that has a bit of extra trouble, because I don't think that the Saudis have nearly as much diplomatic leverage over Kazakhstan as they have had with other members, that they are much closer and part of the actual core of OPEC. And second, what we call the break-even price, so typically the price at which the budget balances, excluding debt, is much higher in Saudi Arabia than Kazakhstan. Of course, the Saudis can take on debt, they can reduce their petrodollar reserves, but ultimately you really aim to try to keep your budget within the price of oil and not taking too much debt. And I think that in this situation, Kazakhstan can take a lot more financial pain than Saudi Arabia.
This could be quite the standoff.
It is a standoff, and so far what we are seeing is Kazakhstan so far is getting the pressure. Clearly they are noticing it, but they are saying, yeah, we hear you, which is almost sounds to me the same thing that a teenager responds to their parents when their parents are asking the teenager to clean the room. Yes, mother, I hear you. And the room remains untidy for the next 3 months.
That's one side of the untidy room. The other factor in all of this, when I'm thinking about prices, is the demand side. What is, just briefly, the current thinking about what sort of effect the trade war and the effects on growth could have on oil demand?
Before the trade war started, the consensus in the oil market was that global oil demand was going to grow about 1%. So that's roughly about 1 million barrels a day. Or to put it in equal terms to an oil producer, we were going to need an extra Libya in 2025. At the moment, everyone is reducing those forecasts, and the range goes between the most optimistic, that they think that we're going to have an oil demand of around 700,000 barrels a day, so 30% reduction in the forecast, to people that they are beginning to think, well, this is really getting very slow. The trade war remains unresolved. Yes, the Chinese and the Americans are talking, but they are talking about talks. So probably this is going to be worse, and they are expecting oil demand to slow down to about 300 to 500,000 barrels a day. Still, everyone so far is talking about a slowdown in the growth. We are not talking about a contraction in oil demand, which we saw obviously during the pandemic, but that was an unprecedented situation where everyone was not traveling. But we saw a contraction in oil demand back in 2008, 2009 during the global financial crisis. So if the global economy slows down a lot, we may move from a slowdown in oil demand to an actual contraction, which together with OPEC fighting internal dissidents, that could be a recipe for much lower oil prices.
Okay, Javier Blas, Bloomberg Opinion columnist, thank you very much. And you can read Javier's latest work at bloomberg.com/opinion. For more explanations like this from our team of 3,000 journalists and analysts around the world, go to bloomberg.com/explainers. I'm Stephen Carroll. This is Here's Why. I'll be back next week with more. Thanks for listening.